I think we would like to also understand in the context of blended finance.
I don't know if there's such a thing or still work in progress.
Welcome to the podcast collaborations between Money Mission and NGOPI, the podcast that delve into the world of impact and sustainability. So this is very special podcast series of collaborations between AVPN, the foremost impact investor network in Asia, that dedicated to moving capital towards impact, and also GoTo Impact Foundations, the impact catalyst on missions to cultivate innovations ecosystem for sustainable impact at speed and scale. I'm your host, Dini Indrawati Septiani, Southeast Asia Regional Director of AVPN.
And I'm your co-host, Monica Odang, Chairperson of GoTo Impact Foundation. So in this episode, we'll be covering all about blended finance, what it is, why is it important, and today's episode so happens to take place at this event, a G20 GBFA China ASEAN Capacity Building on Blended Finance event in Kura-Kura, Bali. So let's not waste our time. Let's dig right into the importance of blended finance and how together we can make lasting impact.
So in today's episode, we have Paul Horrock, Head of the Private Finance for Sustainable Development Unit of OECD Development, so Corporations Directorate. So you want to also introduce yourself?
Yes, thank you very much. That was my introduction. So it's great to be here. Really happy to see to talk about blended finance. I lead the team at the OECD that works on blended finance, on the definition, on the data, of setting the practices and policies for our lenders, and working with about practitioners to Southeast Asia and to the Indonesia. So thank you for the invitation.
Super. So I think we would like to also understand in the context of blended finance definition first before we continue going forward, right? So maybe you can explaining a little bit about what is blended finance definitions to us, and then what is the challenges, especially in the Southeast Asia context, and so on and so on.
Great, thanks for the invitation again. So blended finance is quite a broad term. We obviously collect data and we set policies around definition, which is using development finance to realize additional private finance for sustainable development. What does that mean? That big, a good definition. It needs you've got instruments on one side, so that's things like the first loss, grants as well, but also guarantees and insurance, types of insurance. And on the other side, you've got structures like PPPs, public-private partnership. We've got funds, facilities, risk transfer mechanism where you work with the private sector and go and come together, and also syndication. So there's the both sides, and that's where we do looking at the data of how much we mobilize by de-risking projects. Southeast Asia is a really critical area for this agenda because the SDG gaps are big here. There's very good knowledge in Indonesia around the topic of blended finance, and the government today might find it. In other parts of Southeast Asia, there's less awareness across government that I think we're starting to see that change, and a growing interest and appetite for helping countries, sectors, economies transition towards sustainable development using the concept and the underlying instruments and structures that form our blended finance.
Okay, so actually that's really interesting that you mentioned about Indonesian context as well. So is there any like very concrete structure that you see that in Indonesia also already happening?
I think Indonesia is a great example, thanks to the work that's been done by PTSMI. So there's been some green bonds that have been issued that were purchased by the private sector. We have lots of structures. Those are often funding forestry projects across Indonesia. And so you see the blending whereby the development banks have taken some of that risk off the table by providing concessional loan, concessional guarantee to the project, and thereby helping the bonds be issued into the market and having private investors purchase that bond and be able to have those projects in various parts of the Arctic area of the Indonesia are funded.
So in that context, right, I guess there's the public, there's the private sector. In your perspective, how do you see the private sectors to be able to participate in this blended finance initiatives beyond just the financial contribution in this structure, right? And also, how can like the public and private partnership be structured in a more efficient way? I guess specifically to the context of Indonesia, because it's still really in the beginning of this like blended finance journey.
Yeah. So I think in context of Indonesia, we can see lots of different approaches that the private sector is being made aware of. So first of all, there's these opportunities available in the market, the private sector and development banks are willing to come along. I think there does need to be more of a discussion about what risks are that Indonesia has that was be taken off the table by development banks. And thereby I think we need to have better financial regulations in place for the private sector to be able to work in these different areas that we look at in regards to the SDGs. I think that you've got to also think of it more about how we look at the various instruments that are available in Indonesia and think a bit about both bonds as we've discussed, but also more type of equity type of instruments. We could help more SMEs in Indonesia so that the break from debt quite significant. But there does need to be a bit more of a strategic discussion both from the private sector that needs to look at reporting on these aspects as well. So thinking a bit about the ESG, having better frameworks to be able to underline to investors what sort of benefits going to a vendor's finance transaction, and also making that clearer to beneficiaries of projects. And those are some of the things I think we get that we see. Did I miss your first question?
No, I think you answered it. I think to sum up what you were saying is that the better partnership beyond just financials actually, I would say in a way, better regulation, more discussion, especially around the taxonomy, clarity in terms of definition, accountability. That actually needs to happen from both like from a government perspective, private perspective, as well as public perspective.
Yeah, you fit it spot on actually, but no. So, I mean, it is a thing about sort of the taxpayers and for the public sector to be able to say, one crux say, well, if we're going to use that, we need you to report on it. Or it might be a small piece of structure. So you need to get the private sector to take more risks, and also for the public sector to be able to think about an exit strategy. And where you build these SDG markets, eventually they're getting out and they're run by the private sector. So there does need to be a bit of discussion about how much risk the private sectors willing to take, and that they should take a bit more risk, and also think a bit about the reporting around those projects to really be able to report whether it's on gender impact, whether it's on SME impact, what are we getting in terms of our blend, how much are we getting to that public money, and the private sector needs to talk about that more and not just generally really concisely.
Following up on that, right, you brought up a very good point in which that from my experience, and maybe Dini can add on later on, the way I look at it, a lot of these blended finance instrument, it's being utilized to back big projects, and the projects generally is around energy, agriculture, more towards, I would say, the developing countries' needs rather than issues in health, education, where it's much needed. And because the nature is actually to deploy this instrument to be utilized in this type of project, in a way it doesn't serve its purpose in supporting this smaller scale initiative that actually is really trying to aim to solve issues that are really complex and real, right? So what is your take on that?
It's too much. I mean, what we have at the moment, when we have the highly commercial projects, we have middle income countries where they're mobilizing the most. at the lower end of the impact investors, such as your foundation, GoTo. So there's the gap in the middle. How do we push blended finance, the instruments, the risk profile, the concessionality down in order to help those more needy sectors, but also companies that have. So there needs to be a bit more thinking around the use of the instruments, how you would price it again, so that you make it more concessional. You need to be able to target some of the social sectors, such as health, such as education. That's not about privatizing, but it's a bit about thinking about, say, UID, distilling them within, but it's filled by the private sector. So the building to be green, so you have to deem more of this issue to fund the building, but the schooling still is funded by the company or the private sector or some sort of mixture of that. So there needs to be more of these types of projects whereby you help the social sector, but you still provide the public services where you can. And that you think a bit about all these needs across Indonesia, just with the education. You need to build buildings to be able to, you need also funding to do that. You need green buildings so that everything works correctly. And thereby you need to have more discussions and more concessionality. That means you need to have longer term lending and bonds are a very good solution for that because it'll fade long tenor. And be able to think a bit about ultimately, again, the private sector taking it a little bit. And we think that's impossible again to the infrastructure. So there does need to be a bit more of a move both by development actors at the private sector down the spectrum to those more challenging sectors and economies that are in more in need.
Yeah, I think from your explanations, it shows that any stakeholders need to understand about their role and take part on the blended finance, and also on how each of the stakeholders, what is the target for them to achieve the missions together, right? So I think for this perspective, actually we would like to also understand the role of the government, because you also, trying to advocating the government to also putting very significant regulations as well, and how they actually understand about their role on how to moving this blended finance into the very actual project actually.
So I think if we face Southeast Asia, then you've got to bring people about local currency. You've got to have a multi-stakeholder. Let's take again another example, fisheries. Thinking a bit about mangrove preservation, fisheries, working with the shrimp farmers here in Indonesia. How do you get them working together, bringing all those small SMEs, the municipal government, the local government, the environmental actors and the federal government, all of this journey, whereby you can also access, loan the currency, but sometimes culture might be a big one, and it's not, you don't have enough funding, so you want to attract money from overseas. So you've got to think of it sometimes about the mix, the card, the local currency, and thereby you've got to work with the financial system in Indonesia. So allowing the OJK or the regulator to think a bit about recognizing blended finance, getting blended finance correct credit rating, without peaceful concessionality and transaction. That easily you did another credit rating that's working with the the banking system of Indonesia. Getting things like GSSS columns recognized as a sort of financial tool, using it as collateral, so helping with the whole financial system, making it easy. Letting set up blended finance is difficult. You've got to have, you don't get the price right, and you get punished often by the regulator. So there's so many steps in the way that we have a pace of building sustainable market. But at each point, you're getting pushed back to things in one way or another. So
I'm just curious about the ticket size for the blended finance, because also on how you criteria to choosing the criteria of the project for blended finance, for example. Maybe you can share a little bit.
We want to help beat no one behind because we want to help the whole of Indonesian society, the whole of Southeast Asian society. We've covered it, a lot of people who break out into poverty, so the jobs got even bigger. So I think in some of the ticket size, you want to be able to try and aggregate lots of small projects and help SMEs. That's the challenge because big investors don't want to do small projects. Think always this problem. So, and to issue a bond, you normally use something like $5 big investors like PIMCO, they won't look at anything below a video. So on the one hand, you've got thousands of SMEs that want to create a bicycle repair shop that doesn't need capital, and there's a need for the provider of the job. And on the one hand, so the other think of it about tools that you can create, green, social, and sustainable models of one way we blending to help governments, federal, local issue that is another good way to think of it about this size dimension and creating. But blended finance can work across the spectrum, and you can have the financial system, the banks in Indonesia receive a guarantee for lending, and that guarantee can be on lends in terms of to private SMEs that can then benefit from that guarantee, but stealing that bank extra risk to be able to do lending in a specific sector, say related entrepreneurs, say renewable energy projects, say agricultural projects in Sumatra, whatever. They can target that, and then they can report on that. And if you want to have like 1,000 SMEs that we're getting access to financing at concessionary terms, because the market does not want the medicine.
So do you think like philanthropy can take role on that, like to supporting the bottom of the pyramids of the project?
Philanthropy is key, because often the market and even DFI, you see PTS of mine, one wants to take the risk. So you are a demonstrator. There's a demonstration effect. By demonstrating, you create knowledge, awareness, and take some of those financial risks. So by philanthropy, impact investors, working with DFIs, working with them, you can be able to have the market and bring in eventually, as the project and as the market matures, as it becomes a sustainable sector in itself, other big investors that will be willing to look at that particular project. And they're targeting G sectors such as billionaire entrepreneurs. I think that's something that speaks to me. Got to be the niche that also happens.
With that, do you see that there's a role for an organization, that would become an aggregator of these sort of like small projects? Because you mentioned like one of the biggest challenges is actually the transparency on reporting and accountability. Do you actually see that there's a role for the creation of an organization that actually become the aggregator of these multiple different smaller projects to be able to present, and to your point, right, it might be gender lens, it might be in energy sector specifically, that can aggregate sort of like multiple different solutions that fulfill the criteria that is required by institutional investors, or meet the target return that is expected from a blended finance perspective?
So yeah, I think so. I mean, I think that we do set something up like that. It could be very targeted. You would need something, the project preparation facilities, to feed that entity that would sort of aggregate. To get the size that becomes critical, you need something that would normally target capital markets, and that's evolved. So you still need equity off to ask the other and get it to a fund, but so that, there's one thing that leads to the other, it's a multiple chain. But to be able to do that and aggregate cross jurisdictions, and then also have a bit of portfolio effect and spreading this. Those are the kinds of things that we definitely see, and having some sort of intermediary and facilitate that, talk to the market, but also understand the project and report the KPIs of those activities. That's critically important, if you were a bond, whereby you're making coupon payments based on what those KPIs are and how women getting access to finance. Are they getting it? Okay, yes, we can make them the coupon payment. So these are all really important. There's not enough happening in the financial system. We talk so much about blended finance, and it's almost become kind of like this bishop blend. But you actually need to do a lot more things underneath that. Otherwise, it's just becoming a bit too tight and governance action. We still don't mobilize as much as we want. We're still not going to the sectors that we want. We're still not getting recognition in the financial and ESG. And ESG is still I mean, we're seeing ESG a bit tarnished in the market, and increasingly investors wanting to move to SDGs. But there's still these blockages that we see that are principle in terms of there's something like that. I think would be an excellent solution, and just tell private investors be serious. It is, and you go walk the walk or use the tool.
So in your mind, do you think the problem right now is the access to capital, or is it actually the intermediary line that actually needs to be repaired or improved in a lot of different ways through a lot of things that you say, or is the actual project itself that is solving issues on the ground?
I think you've sort of answered your question with the question. But so I think you're actually right. I mean, it's just those three pieces. It is really sort of about the getting projects, having financial intermediary, and then bringing the private sector in with the regulators which we have. So having all those three building blocks, I think some of those are more important than the other, and some you need one before you can bring in the other. But I think those are something that we would like to see the MCB. We would like to see Indonesia that has then on it so much in the G20 through your presidency, and has pushed, I think, that the Indonesian system, including the OJK, BAPTEA, and others, onto this agenda. But we're still on a just energy transition for everything, because we're still getting enough money. Indonesians still got an awful lot of people that don't have access to capital. Is Indonesia getting more money than it was to do all the projects on some of these things? The big models like car batteries? No. Is it growing at the capital in terms of as much as we want in terms of the economy and the demand? No. So there's these are critical pieces that will help Indonesia transition, both in terms of the economy, tourism here in Bali, where people saying. So I think there's a lot we've got to be able to also get the attention of the private sector, all of the financial, between the banking sector interested in this agenda, and to recognize that stuff's going on. Because at the moment, I'm not telling you.
Okay, so what do you think about the trend, the future trend, and also on how to adapt on the situation and conditions in context of Southeast Asia going forward?
Membership. Well, I think there's started coming. There's some that's been distinct down around ASEAN and these other initiatives that have looked at taxonomies and working together. So it has faced an initiative by Indonesia around G20. We're discussing because we're talking about sustainability that doesn't recognize its borders, but we're also talking about development, which is specific to also Southeast Asian economy and country. So there does need to be a lot more done in this respect at the international level. I think we need to get more of the discussion again at these international forums and bring together part. And also make call to the private sector. Look, we want you to actively engage in this. We're not going to over-subsidize you. We're going to take some risk off the table, but you've got to actually show your willingness and your money, and take the opportunities. These are fast-growing economies with massively dynamic sectors. Lots of SMEs that will be the future big companies of Indonesia, Southeast Asia. So you also, we're willing to kind of come in with some concessional de-risking tools. So I would say seize this opportunity. Also, we come on transparent and benchmarks, and we think about specific sectors like the renewable energy sector, where we get a lot of pushback around commercial on. We really need to become much clearer about the data, about the reporting, to feel confident, because we tried sort of, try to depict a sort of situation whereby we're not having enough information out in the marketplace to be able to drive a decent discussion, and also for development actors to price correcting where they should be in terms of their blended finance. How concessional do we need to be? How cheap do I need to make this money to get SMEs in the renewable energy sector to go into market? I don't know, because there's no benchmark.
Yeah.
Amazing. So that's the reason why we're inviting you here as part of our podcast collaborations between AVPN and also GoTo Impact Foundations to share about what is the importance of blended finance. So thank you so much for your time. And you want to add something?
No, thank you so much. I think this is a great learning, especially for our audience out there, right, in the Indonesian market. Maybe before we close, I want to ask one question. If you can share, I don't know, maybe in Indonesia specifically, if not in the Southeast Asia region, maybe you can share a case or a story where you've seen blended finance really have worked beautifully in solving a real issue. I don't know if there's such a thing or still work in progress, but I think it would be really good for our audience to understand from that context and put that in their head, right? How it actually works trickling down.
Yeah. I mean, I did speak a bit about the mangrove case. I mean, that's where we brought down farmers together. We wanted to reserve the mangrove and increase it. We also wanted to ensure they had a mind rhythm, and there was a sort of pressure between their commercial needs and sustainability. And we needed a critical number, so you need to bring the same elements together. I could always start on Indonesia, of course, but the ability to be able to think of this about measuring that commercial reality and the need to reduce shrimp for export. There's a lot of shrimp actually that's exported from Indonesia to the United States. But there's also, we eat it here with clarity and it's lovely. But getting that commercially viable and bringing those farmers together. So I think it was concessional low. They allow the farmers to build some protection, recognizing the mangrove. So you have a situation whereby mangrove was increasing, protecting the shoreline, ensuring there wasn't this sort of erosion for beaching and other areas, and at the same time being able to ensure their livelihood and also produce shrimp. So it was a agriculture lending where the concessional loan that allowed the farmers to be able to expand and deal with mangrove preservation and growing it, and at the same time how Indonesia and how currency export is a fortune product species.
Thank you so much. Thank you so much, Paul, for your time, and thank you for being on our podcast. It's been such a pleasure to have you.
Not at all. Thank you for the invitation.
Thank you, Paul.